Welcome to the Physician Sense Podcast, a podcast designed specifically for physicians, offering a breakdown of complex financial topics to help you develop your financial IQ, further your financial journey, and improve your well-being. Whether you're a medical student, resident, fellow, or attending physician, you're sure to learn something new that will benefit your journey. And now, your hosts, Chad Chubb and Tyler Olson.
Welcome to another episode of the Physician Sense Podcast. I am your co-host, Chad Chubb, with the one and only on this screen, if you're watching YouTube, Tyler Olson. Tyler, one of my favorite topics, physician mortgages. Also, we are coming off our third wardrobe change, which many of you don't know. So if you're listening on the podcast, you don't get to see our beautiful faces. But Tyler and I have nailed this now, where we always bring a couple shirts in between every episode. Him and I jump off screen and change. So on our third wardrobe change of the day, but we're going to end with a fantastic one on today's episode, physician mortgages. Tyler, welcome as always, a fun topic. Where do we start with the term physician mortgages?
Ooh, I think that they're a really good opportunity. They can be a trap. So I like them and I don't like them. I guess I kind of like them how I like credit cards. They can be a useful tool, but you have to use them properly. I find that just from the trajectory of the life of many physicians, they get to a point where they finally can, they're going to be in a place for a certain period of time, and they have some confidence that they're going to stay there, and they want to be able to own a home, and that is natural, and I can appreciate that desire. And most traditional mortgages require, unless you're going to do like an FHA loan, which is not, that requires a lot more work and closing costs are higher. Just forget about that one. But conventional mortgages, you got to put at least 5% down. And depending on where you're looking in the country for a home, we're talking at least $10,000 in cash plus closing costs of 3% of the purchase price. And so it's a lot of cash. And depending on the physicians, where they're at, in training or out of training, they may or may not have that cash. And then to boot, if you put down less than 20% on a conventional mortgage, you also have to pay private mortgage insurance, or PMI, which the cost varies, but in my experience, it tends to cost an additional 0.4% on top of the interest rate. So it's just more cost to be able to buy a home. But with a physician's mortgage, you can put 0% down if the purchase price is less than $750,000, and you get to skip the PMI. So that can be really helpful. And that way you only have to address or pay for the closing costs and the maintenance of the home going forward. So I say that like it can be useful because of those benefits, but it can also be a trap because you think like, well, I thought maybe I could only afford a $300,000 home, but with a physician's mortgage, I don't have to put any money down, so I could do $700,000. And if you do that without actually factoring in your household income relative to the purchase price, the physician's mortgage can be a trap. So I'm cautious. I like it, but I'm also cautious. How about you?
Yeah, I always say it's a nice card to have in your back pocket. It doesn't mean that you need to use that card. When we're recording this video, this podcast, it's also a completely different world in terms of interest rates. When rates were 3%, I wasn't as concerned about a 0% mortgage, a 0% down mortgage. Now, all of a sudden, rates are 7, 8%. 0% down might sound great. That could also be financial catastrophe in the long run. So that's also changed this narrative quite a bit. And even there, we've always said, hey, we want to do two things here. Let's go get a quote for your traditional physician mortgage. Let's go get a quote for a conventional mortgage. Because while everyone makes PMI to sound like it's this boogeyman, PMI does fall off. So while it's not great to have, but let's just say you can get 10% down, conventional mortgage has given us a rate that's lower than that physician mortgage. That is one of those areas where even though PMI will be there for a little bit, eventually PMI will fall off. And a small change in interest rates, and when I say a small change, a 0.5%, you might think, oh, it can't be that much. You're looking at, let's just say, a couple $100,000 home. This ends up being tens of thousands of dollars, if not more, the larger the home gets in the duration of that loan. So that's usually why from our side of it, we still want to compare those. Even maybe it is 5% down with that conventional mortgage, as you noted. But if that rate's lower, even having that PMI around for a little bit might not be that bad. So physician mortgage is a great tool to have in your back pocket. It's something to know about. I don't know if you've seen any crazy horror stories. You also need to make sure it's a true physician mortgage, because we've seen some weird things out there. We had clients join us a few years ago and they had 2 mortgages. I'm like, what is this? They're like, that's our physician mortgage. It's like, that's not a physician mortgage. What happened? Like, well, we got this mortgage, which allowed us to get 20% down on the main mortgage. So this loan, it wasn't a mortgage, it was just a personal loan. They took out a personal loan essentially to then remove the PMI off their main mortgage. So when they came to us, they technically had 2 from a bank. This is from a bank, clearly from a bank, but it was sold to them. So, when we talk about physician mortgages, whether it's our YouTube channel or our blog post, we'll always say, like, don't just trust the broker saying, oh yeah, it's a physician mortgage. And we've seen other things, that's our craziest one, but we've seen some other things where, like, that's not a true physician mortgage. I don't know what the heck that is. So keep an eye on that. Again, I keep saying it, but great card to have in your back pocket. Does not mean you utilize it. Does not mean you utilize it, especially where rates are today. I think even they're even less attractive now than they were 2 years ago per se. But that could also change. If rates come down, I could be saying the exact opposite. And the other thing, I know you noted the 750. That's a good point too, because a lot of banks will also have different numbers. I actually usually will use 750 as my first cutoff and then 1.25. That seems to be very common numbers for a few banks, but not every bank will follow those standards. And what I mean by that is that means any mortgage under 750 could be a true 0% down mortgage, right? You don't need any down payment. Then what we usually will see is they'll require up to 5%, even on a physician mortgage, between 750 and 1.25 million. And then after 1.25 million, you can still do it, but they're probably going to require about 10% down. So just keep that in mind. If you're shopping, trying to keep up with the Joneses, it might not be a true 0% down payment. And I say keep it up with the Joneses, but if you're looking at houses in the Northeast or in Southern California, heck, starter homes, unfortunately, could be above 750, at least, if you have a young family, you're trying to have a little bit of yard in the background. So it really does depend on where you live in terms of, and that's the hard part with physician pay. We get into this whole conversation on those numbers. Don't really, rural Iowa versus I'm trying to buy my first home in New York City, completely different homes at 750, right? Heck, you might not find anything in New York City, where in Iowa, you could have an entire state. So it depends on so many factors.
Yeah. I like how you put it. It's a tool to just have available to you. And man, I cannot get over that example you shared with me though. A personal loan to function as the 20% down payment. Like, I'm thinking about the origination fees there. Like, what's the drive there? Like, that would compel a lender to do that. Yeah. So it's good to be mindful of that. And like the physician mortgages that we've seen, they're always very clearly, like, even from a label standpoint and like what's in the contract, it will specifically state that it's a physician mortgage, because the reason why this is even offered is because
good point.
Lenders recognize the sustainable income that you physicians have in front of you. You're never going to not be busy in your practice because there's so many people that need your help. And so the lenders know that. They know that you earn an above average income. They know that even if you're a resident and you apply for a physician mortgage, they know that as long as the borrowed amount meshes with your current household income and assets and liabilities, that they know that your post-training income is relatively high. So that's why it's offered, because the lenders, when I say lenders, I mean the banks or credit unions, but behind the scenes are the underwriters. Those are the people that are evaluating you as a risk and what level of risk you carry as an income producing and debt accumulating individual. And physicians are in a much better situation than most people, financially speaking. And so they have this carved out. And so it's a good thing to consider. Another thing you want to be mindful of too, though, is making sure that you're not using the 0% down as an excuse to buy a home where you are not going to be living there for very long. I'm talking about emergency medicine, family medicine residency where you know you're not going to stay there after your 3 years. Or you're starting your first attending job and you're moving to a place that you have no familial ties to and you have no idea if you really are going to like your job. Do not use the physician mortgage as a crutch to jump before you really know what you're getting into. Because home ownership is expensive and a short turnaround on buying and selling is really, really expensive. And if you have a 0% down physician mortgage, that means you have no equity in the property. Equity means the amount of the value of the property that is actually yours. When you have a 0% down mortgage, the bank has all of the equity. And so what that matters on a short turnaround on a buy and sell, because the real estate market values, they must go up in order for you to not owe the bank money if you have to sell in short order. Because closing costs on the buy end and the sell end force it to where you can't just, like, if you bought a house for $400,000 and 3 years later the market was flat and so you have to sell it for $400,000, you may very well be in the negative after closing costs are considered. Depends on how much of your payments were toward principal during that time. And we don't have to get into the minutia, but just you want to evaluate the risk of how likely you are to sell in a short period of time and what you would do if you selling a home would result in you either paying the bank money to get out of it or you having to become a landlord. So be careful with this.
Yeah. And to add on that too, you're going to hear more and more stories as of more recently of some physicians that did buy a home earlier on and they essentially made a whole bunch of money. That is a unique situation. The real estate market that we just went through, where so many housing prices doubled in some areas of the country with these very low rates, is not going to be common forever. So if you're talking to a colleague that's like, I bought a house in St. Pete, Florida, my intern year, I sold it for double 3 years later. One, that's fantastic. We love them for that. That's a huge win. That's not going to be common everywhere. So when you hear these one-off stories, just don't assume that is the case going forward. So just be very careful with that. I've had that comment more recently in the last year or so than I did in about the last 12 years before that, in terms of, well, but my colleague said this area is, going gangbusters. And it might, but those short-term windows, it gets very dangerous. One, just the actual ebbs and flows of the real estate market. But two, as you said, Tyler, you go in 0% down, and let's just say, your closing costs are 3%. You're 3% in, and then you got to sell it again. You're 6% in. If your house didn't go up 6% in that short period of time, which is a decent ask in a short window, you could have lost money on that. And that's where I think, a lot of people we think it's real estate. You can't lose money. So just be careful in there. Physician mortgage is a great tool to have. It is a tool that many others do not have. And I know it's called a physician mortgage, but I always give a shout out here to my dentists and my vets. You're included in here too. I don't know why they didn't give you a shout out in the name. They didn't. And I also believe I think attorneys have, I'm not an attorney specialist, but I believe attorneys also have a similar type venture available to them, really based on that higher income. And maybe I think someone said maybe it's some engineers, but I only know my people, physicians, dentists, vets, all have access to this physician mortgage. So just in case if you stumbled upon us and you're not a physician, you still get some love there. I know we wanted to keep this one a little bit shorter, Tyler. What else do you want to add?
Well, we're not mortgage experts.
No.
So we intend to bring someone on who can speak in greater detail to the minutia of mortgages and physician mortgages. So we wanted to give you just a little bit of a high-level concept of what the physician mortgage is and the pros and cons. We'd like to go deeper, and so stay tuned for a future episode where we'll be able to lean on someone that deals with this stuff day in and day out. I'm looking forward to that conversation because I have some questions.
Yeah. And with that question comment, let's remember that if you have questions on physician mortgages, drop those in the YouTube comments. If you're listening, physiciansense.com, we have a Google form in there. Just throw the question in there. We track those. We use those for content, but we'll utilize those in future episodes, and especially once we do bring on, whether it's one or a couple over time, because, on my other YouTube channel, I would say 3 very popular topics are always the physician mortgage, backdoor Roth, and oddly enough, the 457B does really well. So maybe we'll have to add that into our investment topic at some point. So I know you have questions on physician mortgages, so send them our way. We'll queue those up for our expert or even future episodes with just Tyler and I. But this is a good one, Tyler. I love this topic because to me, this is, again, we said this in some of our past investing episodes where individuals think, oh, financial planner, all they do is investing. This is true financial planning to me. This is cash flow planning. This is home budgets. This is how much home can I afford? Is this stupid? Is it not stupid? What do I do? And then knowing that you have this extra tool with this awesome thing called a physician mortgage, whether you utilize it or not, it's a nice tool to have. But I love this topic. Anything before we call it an episode here?
No, I think we're good to go. It was great to talk with you, and we'll see you next time.
Catch you on the next one, my friend.
This information is for general purposes only. This information is not intended to be a substitute for specific professional, financial, or tax advice, as individual concerns vary. Please see a financial professional, CPA, and/or an attorney in regards to your own individual situation. Wealth Heals Advisory Services and Financial Planning offered through Vicus Capital Inc., a federally registered investment advisor. Olson Consulting LLC, offering advisory services and financial planning, is a state-registered investment advisor.